All right, welcome back. Let's answer some of your questions now. Joe, turn over to you first. Mike in California. Good time to get into Nike, yes or no?
Yes, it is. I know the stock is trading at 88. It was down at 60 back on March 18th. But you're buying the balance sheet right here, Scott. You're buying the consumer loyalty. This is a quality brand that will participate in the global recovery once that begins to normalize.
That's a big gain, though, in a short period of time, Joe. You'd buy it right here, $88. Buy Nike today.
I would buy it right here. Buy it right here at 88. I think there's further upside ahead. They report earnings at the end of June. They'll be able to endure because of the balance sheet, because of the loyalty of their consumer base. And I think you see a $100 print at some point in the summer.
Pete, Tommy in California wants to know about Virgin Galactic. Is it a good long-term stock?
Well, I don't know necessarily long-term, but I think at least in the short term, I actually own the stock itself. I don't own calls. It's not in the options world right now. I actually own the stock. I think it is going to blast off. I think it's going to go to the upside. And we just had the CEO on just before we came on, and very impressive. A lot of different details about what they're doing to get themselves going into the future. I think this is a name that could very easily get over at least 2025 and not too terribly long, Scott. I like this name a lot.
Carrie, Allen in New Jersey wants to know about Home Depot. What do you tell him?
Alan, Home Depot is a great company, great stock. We own it, but it's up 50%, I think exactly 50% from the bottom recently. And so if you start a position, don't buy too much. In terms of fundamentals, things are going well. They've opened most stores. They have really mastered the curbside delivery. DIY is very strong when people are at home. We think it's a fantastic franchise, but not a whole position right here.
Okay. Mr. Wonderful from Stu in Illinois. Is Tesla significantly overpriced? Elon Musk thought it was. What about you?
You know, Tesla stock, I was a hater of Tesla for a long time until my son, who's an electrical engineer, took me to an electric car race, an F1 race, and all the engineers there wanted to work for Tesla. And then watching you, Scott, last July, when Tesla was downgraded, and I was with my son at the kitchen table watching you, the stock was down something like 11 to 13%. He beat me up into buying some at 200 and change. I didn't want to buy it. I did it for him because he has no money. I should pay him a royalty now. It's my best performing stock over the last year. It's ridiculous. Sometimes you're just wrong. No, it's not overvalued. As Trevor said, do not consider it a car company. It is a technology data company. Every mile driven globally, the data gets smarter, the resolution better. This company is all about the future of autonomous driving.
Should pay the halftime reporter royalty, huh? I don't know what you're talking about. Joe, round two. Daltrey in Atlanta, Georgia. Beyond Meat. What are your thoughts on it? Given the environment we're in, the obvious concerns that I mentioned about meat supply, things like that.
Well, I think there was a concern that you were going to see, obviously, a drag from the restaurant closure. But what you did see was a benefit from consumers bringing in at home. And that has kind of offset some of the potential revenue negativity. As it relates to the price action today, that's really what you have to talk about, because that's the response. You're seeing the momentum players are clearly back in the stock. Now, I know Jim Cramer talked about this earlier in the day. I agree with him. I think Beyond Meat, it's time to get back in the stock. But understand what's going on today with the algos and momentum chasing it higher. Wait for a little bit of a better opportunity or take a little bit of a smaller position. Your point of reference and your risk stop against all of it is $100. It shouldn't go back below there. If it does, you get out.
Yeah, don't forget about the interview tonight with the CEO of Beyond Meat. Pete, to you, Jonathan, Chicago, Illinois. Better stock to own right now, Pepsi or Coke?
I own them both. They both have great yields. They both are terrific companies. I think they're different companies. It's like the Target-Walmart comparison where I think that they're different companies altogether. I think this is the same here. You've got the snacks, you've got the liquids with Coca-Cola. So I own both. If I had to sell one and own just one of these, I think I'd probably stick with Pepsi because of the diversification. But I still like what Coca-Cola has done over the last few years, transitioning away from carbonation, especially in the soda pop world, and getting into a lot healthier side of things. I think it's been a huge pivotal move, and I like both names. But again, gun to my head, I'll take Pepsi.
All right, Carrie, coming to you, Thomas, in Charlotte, North Carolina. Are stocks such as MasterCard and Visa safe?
Well, Thomas, we own Visa. Safe, you mean, should you buy them now? I think what's essential for both of them is that while there's a difficult and challenging environment with people losing their jobs, the move toward whatever type of card you're using, particularly the contactless card, is going to accelerate as people start to really shy away from cash. No one wants to touch it. No one wants to touch your card. If you're the only person who can hold it and try to work through processing that way, Visa and MasterCard are going to be leaders in the field. Visa in particular is one where we like where the stock is today. It's sitting right at its 200-day moving average. And if it can get above 180, which it's right about there, I think that's a nice runway forward.
All right. Kevin O'Leary, lastly to you, Saul in New York. As a young investor with this once-in-a-lifetime investing opportunity and a steady income that is not threatened by COVID-19, what percent of my portfolio should be in cash? What percent should be in the market? What do you tell them?
Well, if you're young, obviously, you want to be equities because fixed income and government bonds, which is the go-to and has been for decades, is, to me, a toxic asset. I would be allocating 10 to 15% of each paycheck into, you can pick a blunt instrument like the S&P, buy the SPY, which is the S&P 500. I think for decades ahead for a young person like this, with one caveat, Scott, I have sold all my long-duration assets. I have sold all my utilities. I have sold anything in real estate that is not residential. I think with $4 trillion being helicoptered into the economy, for the first time ever, we have risk of inflation. Long-duration assets are going to be horrible investments. Pref shares, anything with long duration, including the utilities and REITs I talked about, I think are a horrible place to invest money. So for this investor, I would be a little selective and buy stocks that have pricing power in inflationary times, like great S&P companies. And there's lots of them to choose from, but stay away from anything with duration, anything like a utility or a pref share, or anything like that with long duration. Danger, danger, danger.
And that comes from a dividend hunter himself.
Yeah, I'm scared. $4 trillion helicoptered into the economy? Where's that going to go? And when we start bringing back supply chains from China, that's very inflationary, and it'll certainly happen in healthcare. The cost of a lot of things for us is going to go up at some point. I don't know when, or at least let me put it this way.
Not overnight. I mean, let's
no,
put a caveat here, right? These things are not going to happen overnight.
Yeah, I'm just saying for the next 36 months, that's as far as I can ever see. I think those sectors are going to underperform. But my point is, if you thought we had no inflation risk 4 months ago, we definitely have more now because $4 trillion is unprecedented, and it just, you can see it floating out of the sky.
I hear you.
I mean, that's what's happening.
I hear you.